What's up, everybody? Are you ready for Ghostface True Players Club stock investment video? Okay, here we go. Today, we're going to talk about DBGI, Digital Brands Group Inc. So they recently released their quarterly earnings. And what no one's really talking about yet is the operating expense. It's down to 1.95 million. Now this is extremely significant because December 2023, last quarter that was reported, it was 3.28 million. Before that, it was 5.13 million back in September 2023. So from in the past, half a year or so, they've cut their operating expense by more than half. And now, on a net income basis, they are close to breaking even. Net income's only negative 683.74K. And the only reason they were not net income positive this past quarter is because of a delay in a shipment at customs that had nothing to do with them or their clothes. It was another company's clothes in the same shipping container. So it was just a logistical supply chain issue that had nothing to do with the corporation itself. So what's going to happen next quarter? And it looks like, so they reported income on quarterly income on May 20th. So August 20th, roughly around August 20th is when they're going to release the next quarter. Second quarter 2024 results. And it's almost definite at this point that that's going to mean that DBGI is net income positive for the first time in its history. And that's really exciting. Actual cash flow for past quarter is neutral. So that's actually good considering all the other fundamentals, because last quarter it was negative 1.05 million. So not only are they going to be net income positive, but they likely will be cash flow positive next quarter as well. So that's extremely significant for a small cap stock. When that happens, it changes the trading dynamics. So what are the trading dynamics now? The trading dynamics now are a meme stock like sudden short squeeze or price spike. It may not actually be caused by a short squeeze, but there's a price spike. And, the CEO, obviously, he is a former equities analyst at Citadel. So whether you like that or hate that, he's extremely well connected. So we know that. That's actually a positive in favor of the stock. And it appears that retail traders like myself have underestimated Citadel. And when that happens, it can cause extreme volatility. So that's kind of what's going on. Someone out there is using algorithmic shorting to drive the stock down, and I'm going long. I'm really bullish on the stock. I'm going long. So I'm not real worried about that. Apparently other people are because they're selling it. I don't think it's going to have another reverse split before August, because they would have like 180 days typically if the share price does dip down below $1. Right now it's at $1.72. And then the futures market, DBGIW, is at $9.12. And it's down a bit. It recently peaked at $14.60 on May 20th. So the futures market, you can really see where the stock is heading. The next run up when quarterly earnings get released, if they are indeed net income positive, it's just going to skyrocket. $10 to $15 a share would be a very conservative estimate. It's almost definitely going to go way above that. It's probably going to do Rent the Runway, ticker symbol RENT, kind of price movement. And that's another company in the same industry. And that went from like $5 or $6 up to like almost $30. So that was pretty spectacular. The focus is on GameStop right now, and I'm really bullish long term on GameStop for the stock itself. The underlying fundamentals of the corporation, it's really debatable. Their leases are too expensive is the problem. And the reason why a lot of video game companies went bankrupt in the 90s is because they were renting all these expensive spaces at malls. And in the 90s, when the economy was just like every year it was just like going up and up and up, and it got to a point where we had mall culture, which was it's one of those things where one day I would go to a mall, I would have like the best experience ever, and the next day I would just feel like dejected. It I say that having worked at a mall before in multiple different states. It's interesting stuff. And I don't know if I have time to go into all that stuff right now, but anyways, the retail market it's challenging, and they really are going to have to find out a way to lease for cheaper. And maybe it's a plaza with a complimentary, maybe it's like a clothing and an apparel centric plaza. And then complimentary stores. But the reason why Amazon is so successful is because it's not like it sells brands like publishers. It doesn't have a bunch of specific publishers. It just sells whatever random books people want to buy. And I think long term apparel is going to be the same way, where it just sells whatever random clothing people want to buy, and it uses probability theory. It uses AI to actively analyze the revenue. And I have a theory that DBGI could just absolutely skyrocket in 2 to 3 years, regardless of whether they put in, this advanced theoretical statistics model that I'm talking about. And, I have an extremely strong background in econometrics and statistics. And that's my background, is analyzing revenue. And I don't have the background where I know how to analyze the cost of a corporation, because I have never ran one. I don't know from an HR standpoint how difficult it is to retain people, or all that stuff. But what I like is they have plans to open up 50 stores, right? They've already opened one, and let's see. That store is in a suburb of Dallas. Okay. We entered into a retail store sublease for approximately 3.5 years at the Simon Premium Outlet in Allen, Texas, a suburb of Dallas. We expect the store to generate meaningful cash flow, as we already have excess product that we can sell, which means we will not have to use cash to create inventory for sale. We expect the store to generate over $1.5 million in annual revenue and over $500,000 in free cash flow. So this is a good business model. They're going to expand slowly. They're not just going to conquer the world with like thousands and thousands of stores. They're going to use free cash flow and excess supply to sell clothing that they would otherwise have to sell at wholesale prices. This is a good business model. And so once they get the profit from the first store going, they're going to open a second store, and they have plans to open another ultimately 50 stores in the next 2 to 3 years. And once that happens, I think revenue is going to spike. I personally think that technically they could do better if they didn't open any stores. And I know the CEO says touch, see, feel, the theory for apparel. So, that's a traditional theory. But as we move into the future, clothing is going to be brandless. Do I really care that my t-shirt says Hot Topic? Do I really care that I bought it in LA and that, like, the woman I bought it from was really hot? No. Well, I mean, I cared at the time, 2 years ago, but, now I'm sitting in Kingman, Arizona, alone, single, fucking pathetic. Sorry, we'll edit that out later, or, what, just forget I said that, but, drinking a LaCroix. Do I care? No, I don't care. I mean, this probability theory model, DBGI could be like Amazon if it really wanted to. And as a large investor in DBGI, Digital Brands Group, Inc., I think I can take us there. I'm going long, and I have a theory of share accumulation. I'm not trading the warrants and the futures because I think they're pre-funded warrants, so the exercise price is already built into them. I'm not gonna pay like $10 to $15 for a stock warrant when the stock itself is only like $1.72. I'll just take the risk and just buy the stock itself. And what's cool is that you have to remember, if you're an early investor in a corporation, similar to what AMC sort of did when they issued the ape stocks, the preferred. Um, it was like a different. It was sort of like a preferred, but like kind of like a different series of equity. They could say everyone who owned a stock, who owned some stock by December 30th of 2022, the end of 2022, when the share price was over $100 a share, we're going to issue you one share of preferred, of like Series C preferred equity to reward the early investors. Remember, a corporation can do that, and they can do that like magic. So, it's always good to keep a good attitude, um, which is difficult. I know. I know some of you are pretty angry at Citadel. They've manipulated the price down from over $100 a share to $1.72, and they've had 2 reverse splits, one for 100. So every 100 shares was split down into one, and then after that, 8 months later, in August or September of 2023, they had a second reverse split, and then the remaining shares, 25 of those were split down into one. So, a lot of people who had hundreds of shares, or even like maybe close to even close to 1,000 shares, honestly, I guess, that got split down to like one share. That's no fun. But I guess if the NASDAQ and the powers that be allow it to happen, then that's just the game we have to play. How do we change the rules of the game? That's what crypto is for. You buy crypto and you don't really necessarily have to worry about the corporation going bankrupt, because there is no corporation. But here, we're talking about a corporation. Now, the power of a corporation is interesting because all of its power can be taken away if it goes bankrupt. And even in that worst case scenario, what's interesting is a corporation like this, it could easily do a Bed Bath & Beyond type short squeeze, even in the worst case scenario that it does go bankrupt, where Bed Bath & Beyond suddenly went from like 40 or 50 cents to like $5 or $6 a share in like 2 days. And then they announced like the bankruptcy like a week or two after that. But and I lost some shares in that Bed Bath & Beyond bankruptcy. That was kind of part of the meme, the meme crew. And it just is what it is, I just move on with my life, and I just, whatever. But there's literally no reason for the share price to be this low. Just literally none. Obviously, if they were about to collapse, they wouldn't be opening up a store in a mall. If I were just to walk into a mall in Dallas, Texas right now and go, hey, lease me this store, they would tell me no. If I were to walk in to the Hot Topic and say, hire me, they would probably tell me no. it's not easy to do this stuff. And what DBGI is doing is really unique. And the CEO has already acknowledged that no one has cracked the code for apparel in an Amazon-like digital internet way for e-commerce. Now, I disagree with the theory, the omni-channel theory, because leasing a building is inefficient. It's economically inefficient. Leases are too expensive. Everyone knows this. This is why a bunch of malls in the 90s suddenly collapsed. Because it was all hype. It was like Megan wants to go to the mall on Sunday because she wants to make Chad jealous because blah blah blah, and she's gonna wear a hot little skirt, and it was just it's just the social behavioral model of what people do. Like they're just kind of going there to socialize, and it's pretty cool. Like it'd be cool to like live like on top of a mall and just kind of like wander around. Like that'd be pretty fun, right? I just read an article saying there's a woman doing that, and like her lease is like $4,000 a month for like a tiny little 1 bedroom. It's a showboat thing, and it's I mean, I think like a pop-up event, like like an art gallery, that would be really cool, right? you know um like an art party, and oh hey, uh we have these clothes for sale, we have an excess supply in our warehouse right now, we could give you half off for the next like 2 weeks or something. And yeah. Obviously we're getting to the point in the future where you'll be able to just kind of like virtually try on clothes and see if they fit. You'll just upload a picture of your body, um, and just see if they fit. And it's going to be really interesting stuff. Amazon dropped when Amazon got really hot. It was over $100 a share, and it suddenly dropped down to $6 a share. That's kind of from the data I'm looking at. Like DBGI is kind of at the bottom. There's like a big slope, and it's kind of at the bottom right now. And then when it curves up, it'll really suddenly curve up, and it really, there's only there, even with some warrant, there's going to be no dilution for the rest of the year, but some warrants did get exercised, and there are some more warrants that got issued. That's only like another 1 or 2 million shares we're talking about, and there's less than 2 million shares right now. So like, and they're not going to exercise those warrants with the stock price so low as it is right now anyway. That's not going to happen until later in the year if the stock price goes way up. So people are kind of learning to go long on this stock. I don't know. It's just unbelievable to me that it's so low. And let me just I know this is a long video, and if you're watching the whole thing, I do appreciate it. But these are their jeans. DSTLD skinny Los Angeles. And they're the coolest jeans that I could find on the internet, especially in the price range. They went on sale for $40, and they haven't went on sale since. and my size has been sold out for you know, this whole time now. So I can't even get my size. Well, I think I can, but they're like $120. I don't know if I want to like pay that much. Um, I mean, yeah, maybe if the stock goes back up and I actually have the money again, but who knows? And that's just their men's clothing. They're mainly focused on women's clothing, which, obviously I don't really know a whole lot about. Um, but I just I feel like they're going to be different. They're looking at where other companies have failed. They're making a good faith effort to do that. And even just their name, Digital Brands Group, that's pretty trendy right now with all like the NFTs and the crypto. They could easily give you you buy for every clothing item you buy, they could give you a free NFT, right? That doesn't cost them any money to do that. And then, some years later, the NFTs could be worth something. Um, it also kind of, in the NFT, now here's a good idea. The NFT itself, um, it could kind of be like a benchmark for like your size. So that way you kind of know when you go to order in the future, like what fit well, what didn't fit well, what you didn't like, and they could put all that information on the NFT, right? So that way, you could just it could serve kind of like as a favorite, kind of like as like a favorites button or whatever, and you could kind of like click on the NFT and go, oh yeah, this isn't available on their website currently, but I'm gonna like email them or call them and tell them, hey, um, I'm looking at my NFT for this clothing item I bought, a couple years ago, and it was so cool. And I went on a trip and it got lost or something, and um, I want something exactly like that. And then they can go, oh, okay, cool. And if enough customers do that, then they can uh, build that exact apparel item again. And there's 3D printing now too. And 3D printing is more like a manufacturing and like metal kind of a deal, but um, once it hits apparel, that's going to be really interesting too. So they're on the Nasdaq, so they're ultimately like a tech stock that happens to do apparel, and there's just so many avenues. And the biggest mistake in my stock investing um, was I really should have bought Amazon stock in the 90s and just sat on it. Forget the S&P 500. Just forget it. It's just ridiculous. I mean, yeah, if you have that level if you're that risk averse, if you don't want to take any risks at all, just go open up a savings account. You can get surprisingly high interest in a savings account right now. Like 4 or 5%. So you got a couple $100,000 in a savings account. You're pretty close to $7,000-8,000 a year in interest income. So why stress out about stocks or the S&P 500? Because the S&P 500 is way high right now, and a lot of people are frustrated. I know my life got just upended by the 2008 recession. I lost my house in Phoenix to foreclosure. Um, it 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 just it really negatively impacted my life. Um, yeah, so my generation, we're kind of there's this frustration with kind of the way the financial system currently works. It kind of seems like it still works the way it does before the Great Recession kind of happened, where like these hedge funds are in control, and you know not all hedge funds are bad. There's activist investors. There's people who use the money for activism. I'm obviously an activist. um and I don't know that I'm really want to go into all that right now, but yeah, uh this could spike to $3 to $5 even before August really easily. Um, but yeah, once the next earnings get released in mid to late August, and if it's net income positive, it could easily hit 30, maybe even like $50 a share. So it's gonna be interesting. All right, happy investing, people.